form, right? That was the historical context, basically. And so notice how the form is called the 1041 form. Emphasis on the one at the end, because it used to be part of the 1%, right? Only the 1% historically had access to even this form. In that you typically are filing a 1040 individual income tax return. You probably see some of those, as you see on the screen here, you see some of those already identified on the form itself. But let's say they said, we'll do you one better and put you as part of the new 1%, where this form is now available to more people. Thank God for people like Christina, Yvette, and the 7 Ways to Wealth group and the team. And that if we did not know individuals like Christina, we would not really have access to this form. Historically, this form was only truly available to the 1%. And that's why it's called the 1041 form. I'll do you one better, basically, above the 1040. And so historically, the rich, the ultra rich, the mega wealthy, those were the only folks using this form. And so full disclosure, you still need to file your 1040 individual income tax return, as everybody does in the US, right? And that's to report your personal income and any other personal deductions that are allowed by the tax code, like, your mortgage interest, property taxes, all that good stuff. However, you now want to live through a business. You are a business now. As a matter of fact, God forbid, but when somebody passes away, they become a business entity known as an estate, right? They become a business entity known as an estate. And pretty much the purpose of the estate is to determine, okay, as you are gone from this planet, who gets to take over your assets, right? So they create an estate for you. You become a business when you pass away. And so one thing you could do is become a business now if you haven't already. And so that's where we have the trust, right? We have the trust. And I know with Christina, we're normally, or the 7 Ways to Wealth team, we're normally doing the 3 trusts. You got your business trust, your family trust, and then you have your ministry trust, and for your charitable and for your philanthropic activities. All right. And so basically what we want to do is, this is the form that we use for the first 2 trusts that I just mentioned. Remember, you have your business trust, and that's for your business to own your businesses. And then you have your family trust to own your personal assets, like your house, your car, anything that is not deemed a business asset, basically would be owned by the family trust and controlled by the family trust. And then for your philanthropic and your charitable activities, you go with your ministry trust. That ministry trust does not have to file a tax return. That ministry trust does not have to file a tax return. And the reason why is because churches and, our religious organizations under the tax code are exempt from not only paying taxes, but also from even filing taxes. Churches and religious organizations do not have to file a tax return. Now, you can if you want to, but you don't have to, right? And so with that being said, this form here, the 1041 form, is going to be used for the business trust and then the family trust, all right? So today we're going to focus on the business trust. I'm just going to take 15 minutes to go over this form, and then we'll save 25 minutes for Q&A, right? We'll end right at the 12:30 p.m. Central. I know some are Eastern, some are Pacific, but my time zone is Central. And so with this form, basically what you're doing is, number one, you want to have a professional, right? Ideally, please don't try this at home. It can be a bit tricky, right? You have support. And shout out to, Christina and the team who dropped the link in the chat. Anybody who's looking to work with our firm, Badu Tax Services, I'm a CPA. We're more than happy to assist you with your tax needs and everything like that. All right. But this form, the way it works, and it does help to understand how these forms work, how everything flows. That way you're aware, right? Becoming aware is very important. So, and this is the 2025 form. So this is a fresh form, just came out very recently. And what we're doing is we're filling out when was our trust created, or what is our fiscal year for the trust, I should say. And let's just say you created yours in the 2025 tax year, right? This is the assumption. We're going to assume you created your trust on January 1st, 2025. You're going to put the date, the formation date, the start date at the top. And then when does your fiscal year ends? Everybody pretty much fiscal year ends 12/31, December 31st, except for maybe a few nonprofits, right? Some nonprofits, they choose to end June 30th as part of their fiscal year. All right. So if your fiscal year ends June 30th, then that's what you're going to put as the ending date. So with the type of trust that Christine and the team set up, we're usually doing complex trusts, right? Complex trusts. So basically, these are irrevocable. Keywords, irrevocable. When you see the word irrevocable, it means that it is a complex trust. All right. When you see revocable, it is not a complex trust. It's usually a simple trust or grantor trust, right? And so, with that being said, if you see revocable, usually that trust does not have to file a tax return. It doesn't have to file the 1041. Unless the person has passed away, then they have to file the 1041 because they do not have a 1040 individual tax return anymore. Right? Everything goes now on their trust tax return, assuming that they had one. All right. But if you see irrevocable, you must, and I repeat, there's no way around this outside of the ministry trust, you must file a tax return. So let's make one thing very clear. Even if your trust earns zero, generated zero income in the year of 2025, and it's an irrevocable trust, a business or family trust, not the ministry trust, but business or family trust, you must file a tax return to stay compliant with tax laws, tax rules, and regulations. There's no ifs, ands, or buts about it. All right. And so basically we check the complex trust. We check that box because that's what all irrevocable trusts are. We put the name of the trust. So this is the John Doe. This is a sample form, of course. This is the John Doe Irrevocable Business Trust. You put the tax ID number. All trusts have to have a tax ID number. Even the revocable trust still has to have a tax ID number. And so with that being said, you'll have your tax ID number here. And then you'll have, the name of your fiduciary. Notice how you're not putting your name. You're putting the fiduciary name. This is the trustee of the trust that you pay a fee to, whether it's a third party company, whether it's your attorney, whoever it is, you're putting their name, not your name. You're putting the trustee, the fiduciary, the trustee of the trust. And if it's an estate, it is the executor of the estate. So your fiduciary is basically the person that you're putting their name. You're putting their address, not your address, but you're putting their address on here, right? And so 123 Main Street, I'm based here in Dallas, Texas, and that's why you see the address here. And then when did you form your trust? When did you create your trust? In this case, sample is January 1st of 2025, all right? So the way the trust form works is that you're putting your income and then your deductions of the trust. And then also, usually with these trusts, we're making you either a 2%, right? I've seen historically 2% owner of the trust, your personal name, and then, your business. So let's just say that you have a business like an LLC, right? Your LLC is going to be owned 2% by you as an individual so that you can control the LLC. But the trust owns 98% of it, essentially. And so what's going to happen is that you're basically going to have multiple K1s that this trust is going to issue the K1 to, right? So you ultimately control the trust. You're the one who basically controls the trust, but you're filing a tax return for each business that you own, right? So let's say you own a business let's say you have an LLC. Now that LLC has to have two or more partners because it has you as the partner, 2% owner, or if you have a spouse, let's say you one and 1%. And then the business trust owns 98% of it, right? And so for that, that business is going to essentially issue out a K1, um, to the trust, right? The business is going to issue out a K1 to the trust. A K1 form is the form that you use to report the income and expenses that are allocated, the profit or the loss of the business that are allocated to each owner of the business. All right. But if you have a single member LLC, let's say you opted for doing a single member LLC for whatever reason, where your business trust now owns 100% of the LLC, then that LLC is usually going to file a Schedule C form to report the income and expenses of that Schedule C. So let's say you're a real estate agent, and for whatever reason, you're using the Schedule C form to report your income and expenses of the real estate agent business. You have $100,000 of profit, so you have $150,000 of income, but then you have $50,000 of expenses. That means you have $100,000 of profit. That's going to go on line 3, right? That's all going to go on line 3 essentially, because that's your active business, right? And then if you have stocks, if you invest in the stock market and you sold, you have what we call capital gains or losses. Then you're going to use the Schedule D, Schedule D, and that basically is going to report your capital gains and losses of your stocks. For my real estate investors out there, you're going to use the Schedule E. Schedule E, same form that we use for the 1040, by the way, but you're going to use the Schedule E to report the income and expenses of the rental property. Just like how when you usually file your 1040, you have the real estate on the Schedule E of your 1040, assuming you don't own it with partners or anything. Then the same thing here, except you're going to use the 1041, this form, right? This overall return, but you're going to attach a Schedule E 1040, right? Schedule E of the 1040. All right. So this is going to report 123 Main Street property, 124 Main Street rental property, the income and expenses of your property. For my farmers out there, right, you're going to use the Schedule F to report the income and expenses of your farming business. But what becomes very common is that you have your LLC that is owned by your trust and you. And so that LLC is now no longer a single member LLC. It is now a multi-member LLC. And so you notice that multi-member LLCs, they're called partnerships. And so we're going to use a partnership, what's called a 1065 partnership tax return. And then that partnership is going to issue a Schedule K1 to the trust, the 98% owner, and then to you personally in your personal name as a 2% owner of the business. All right. And so that basically is the structure. Some people do it 100%, right? They'll do 100% owned by the trust. And so basically this trust ideally owns all of your business assets. It owns all your business assets, your real estate agent business, your real estate rental property business, your farming business, your stock trading business, everything. All your businesses are basically owned by the trust. Let's just call this a holding company. Let's call this a holding company, right? It owns, it doesn't control, but it owns your businesses. It owns your business assets. And then your family trust owns your personal assets, your primary residence home, your personal vehicle. Let's say you're not able to claim it for whatever reason as a business vehicle, then your personal vehicle would be claimed as an asset of the family trust. Your life insurance policies, family trust. Basically any asset that you deem personal. So if you think about it and it's like, man, this sounds personal, then it should be owned by your family trust, right? So nothing you own in this world, in the perfect world, nothing you own in this world would be owned by you individually, except for that 2%, that small 2% that you allocate to your K1 for your partnership business, your partnership LLC. Here's a very important thing to note. An irrevocable trust cannot own an S corp. Let me repeat one more time. An irrevocable trust cannot own an S corporation. An LLC tax as an S corporation or a corporation tax as an S corporation. According to the tax code, they do not allow an irrevocable trust to own an S corp. So if you have an S corp right now and you're interested in this particular strategy, what you would have to do is revoke the S corp, right? And that's something we can assist you with. You would revoke the S corp status and basically let the IRS know that, hey, instead of me being an S corp, I am now a multi-member LLC where my trust owns my LLC 98%, and then I own it individually 2%. Right? We file a partnership tax return instead of an S corporation tax return. You notice the words S corp are not on here because an S corp cannot be owned by a trust. And so your trust owns the businesses. And then the trust, what it's going to do is the business trust actually, in reality, is going to issue a K1 really to just it actually should be just one. It's going to issue a K1 to the family trust, right? It's going to issue a K1 to the family trust. And the best case scenario, the best way this works is that you set a budget for the year. For let's say you make $1 million in income for your businesses, all your businesses combined, and your business expenses are, let's say, $750,000, which is, quite a bit. And so you put all of that on your partnership tax return. So you're left with $250,000. What you want to do is create a budget for the family trust and say, okay, my mortgage, my medical expenses, child care expenses, all of that, I'm basically going to be paying it through my family trust. And so I'm going to create a budget. And let's say that is about $100,000 for the year. So now you have $150,000 left over. Unless you're planning to buy real estate or make investments, you might be better off putting that $150,000 in your ministry trust, because the ministry trust is a non-taxable entity. It's a tax-exempt organization, right? In that if that $150,000 is declared as a profit for your business, it wasn't distributed to your charity, then you're going to pay a tax of about 37% on that. 37%. Basically, any money that's left in the trust is taxed at a rate of 37%, right? In the family trust, the business trust and the family trust, you're taxed at a rate of 37%. So it would definitely be in your best interest to not leave money in the family trust or the business trust outside of investments like real estate, life insurance, right? That's another thing we can leverage in this. We can pay for life insurance. Our premiums are now going to be business tax deductible. We're now going to be able to leverage that policy by taking out loans against that policy if we need money for something else. And then you're basically going to be paying yourself back with interest to your own life insurance policy while your trust gets to write it off as a business expense, right? You can get a Roth IRA account. You can get a Roth 401k account. You can get an HSA, a health savings account. You can invest in the stock market. So there's so many ways you can just divvy up the money, right? And so what you want to do when you're executing the strategy is you want to set a budget for the year and say, hey, how can I zero out my business trust? How can I zero out my family trust? And then how can I keep investing, but then put some money aside to my ministry trust where that's going to sit and, handle my charitable ventures and charitable activities. All right. And so in section, basically we have the income section. Notice how that's all going to be all your income sources for your businesses. And then you're going to have your deductions, including any charitable deduction, money you send to your ministry trust. That's all going to go here. Fiduciary fees, you probably are paying. Hopefully you're paying your fiduciary. So you're going to put that here on this form, right? It doesn't go on in the income section like your meals, your travel, your home office, all that stuff, like you put on your, let's say, your partnership tax return. All right. And then you basically you determine what your total taxable income is, which hopefully is zero, right? Based off what I just shared with you today. And then your total tax, which you usually take your taxable income. and multiply it by 37%, right? To see what the tax rate is. So remember, hopefully line 23 is zero for you because that means you have a zero tax. They do give you a small exemption, very, very small exemption. It's nothing basically, just in case you made a mistake, a typo. And then that determines how much tax you owe, and then that will determine your tax due. All right. And so this is the 1041. This is the form that was historically available only to the rich, the ultra rich, the mega wealthy, the Rockefellers, John D. Rockefellers of the world, because it was a form historically only available to the 1%, right? They specifically called this form the 1041 because of that, because they knew usually only the 1% gain access to this. But now, thanks to Christina Yvette and the 7 Ways to Wealth team, we all can have access to this form. This is the form we should be using. Remember, you still have to file your 1040, right? Everybody on this call has to file a 1040 still. Your individual income tax return, you still have to file it. There's no ifs, ands, or buts about it, right? And the reason why is because that 2%, that you made your business, you listed as an owner, or if you did 0%, right? If you did 0%, right? It just depends how you structured it, how you set it up. But let's say you did the 2%, then that 2% share still has to come to you as the business owner, right? And then you can offset that income with other deductions like your standard deduction, which is about 15,750 on your 1040. Or any other like credits, tax credits, earned income tax credit, child tax credit, American Opportunity Tax Credit. All of that is going to be claimed on your 1040. And so there is some income that you can shift to your personal return so that you don't have everything sort of, for lack of a better term, trapped in your trust, right? Of course, you can send yourself money, you can distribute money, whether you do it as a loan or a distribution. But this is basically the form that we use, the 1041. This form is due by April 15th of this year. And this is how it ultimately works. And so, I know I've said a lot, right? This is very complex stuff. I mean, this is the most complex tax return on the planet. You cannot get any more complex than what we just talked about today. And so with that being said, we would love to work with you, partner with you as your go-to, your preferred CPA firm. The 7 Ways to Wealth team has already dropped the link in the chat, and I'm just going to go ahead and copy it and paste it in the chat one more time too, for those who didn't get that. More than happy to work with you. This form takes you to a quick 1-minute questionnaire. Just allow us to get to know you better, see how, who you are and how we can best help you. And then our team will reach out to you within 24 to 48 hours to basically schedule a time with you, just to go over the results of the questionnaire and also see if we're a good fit to work with each other, right? And so that's basically that. Shout out to the team members that we have on the call today as well. Appreciate you all for joining. And I promise we would save at least 20 minutes for Q&A because I know this is a session where we usually get a lot of questions. And so with that, I would love to open up the floor for any questions. Please feel free to type your question in the chat, or you can raise your hand, unmute yourself, and then ask your question. All right. Anybody have any questions on what we just shared today? All right, man. We got somebody already. Go ahead, Cookie. We got Cookie Wisdom. Go ahead, please.
Hi, Jeff. Thank you so much for enlightening us about all this information. It's so powerful. It's overwhelming too at the same time because you definitely have to go over this information all over again. And I don't want you or Christina to feel like you're the only ones going to Ghana because I'm going myself in February of next year, actually.
Oh, yeah.
So
Okay.
I'm excited about that.
Amazing.
What I wanted to ask you was the family trust. So I heard, I don't know if it's a myth or not, but when you put your home into a family trust, does your taxes go up more?
Well, that's a great question, Cookie. I would say it doesn't go up more. I mean, technically that would be illegal, right? That would be against the law for the county to assess you a tax, an extra tax, just because it's owned by a trust. What you usually may not be eligible for, though, is the homeowner's exclusion, homeowner's exemption. Whether it's a senior freeze or a standard homeowner's exemption for it being your primary residence, or if it's one of those like senior exemptions. So that one they can be a stickler about, right? But there are ways to prove that, hey, I am the owner. I just happen to have my trust, for the sake of asset protection. So you can make a case. Technically speaking, as long as your driver's license has your address as that same primary residence address, then you should be good to go to qualify for the exemption. And so, yeah, usually it's just the exemptions, the property tax exemptions and the exclusions that you may not be eligible for because your house is now owned by a business. And so it doesn't mean it goes up. It just means that you may not be eligible for those exemptions and exclusions.
Oh, so, and also, so you're saying when you have your home into a family trust, the form you will fill out is the 1041 form, correct?
That's right. That's right. Exactly. That's right.
Oh,
For
all right.
sure.
I can't think of anything as of yet, but I will get back on if I have another question.
Sounds good. Great questions, Cookie.
Thank you
For
so,
sure.
so much.
Appreciate that. Yes,
All right.
indeed. Love it. Love it. Let's go to Anna. Anna, please go ahead and ask your question. We got 18 minutes left for Q&A. 18 minutes left for Q&A. Go ahead,
Sure.
Anna, please.
Thank you. So I have three questions. Hopefully, I'll
Mhm.
go quickly. You mentioned that 37% tax when you do the taxes for the trust, the family, and the business, and that is zero then for the philanthropy or nonprofit, right? Um, when you say 37%, it sounded like is heaven. And I'm thinking, is that, hell, 37% is a high. What we're talking about? What is then
Yeah.
the perk of the trust then? Can you please enlighten me with this?
Yeah, so that's the thing. And this is why proper planning prevents poor performance, truly, in this statement couldn't be any more true to this, in that you're not going to really pay any taxes at the end of the day if you set this up the right way, right?
Mm,
So what I'm pulling up now, shout out to AI, right? Gemini, all that good stuff. But basically, the tax rate is 37% if the profit, the net income is over 15,650, which is nothing, basically. Right.
oh,
And so
okay.
that's why I was saying that if you leave money in the trust bank account or trust that is
Mm-hmm.
not tax advantage, like a retirement account or real
Um,
estate, a business, right? Now you're starting to get it right in that we ideally should not be spending money on things that are not producing. We should not be spending money on things that are not tax deductible. Because the moment
mm,
we say, okay, we need $1,000 for something and it's not deductible, then now we're going to have to pay taxes on that thousand. And so what we do
mm,
on is we create a budget. We say, I gave an example. You make $1 million in your business trust, your
mm,
LLC, which is owned by your business trust, and you
mm,
have expenses, write-offs, legitimate tax write-offs of 750,000,
mm,
right? And so now your profit is 250,000.
mm,
And so if I were to basically say that, and let me just pull up a quick whiteboard, right? I like to use these interactive tools, right? Make sure everybody is able to see some of this stuff. Let me make sure I turn off this here. Let's just say I have business trust income, right? Business trust income of
mm,
1 million, business trust expenses, 750,
mm,
business trust net profit,
50.
and I know I'm going fast, so please bear with me. 250, right?
Mm,
If no distribution, then taxes due 250,000 times 37%. Let's do the math real quick.
mm,
So this is if you did no planning, right? If you didn't plan properly throughout the year, you're
yeah.
gonna write a check to the IRS of $92,500, and that's just the IRS. It's not even the state.
Oh my
All right.
gosh.
However, with $100,000 distribution to family trust for
Mm,
family trust expenses like your life insurance, for example,
Uh-huh.
which now becomes tax deductible, right?
Uh-huh.
Then taxes due equals 250,000 minus the 100,000, which is 150,000,
Uh-huh.
times still 37%, because we just saw the rates, the charts, right? I just showed it to you.
Uh-huh. Uh-huh.
That would be $150,000 times 0.37. That's 55,500. Do you want to pay this, Anna?
No.
Okay, there you go. And so the magic step, the final step, assuming you don't buy real estate or you don't have, you're not doing more life insurance, or right, we could dump all
Yeah.
this money in life insurance, by the way, if we wanted to. But let's just say that you did not have any other way to divvy up this money. What
Uh-huh.
you do is, with $150,000 donation to Ministry Trust, this is the secret
Ah.
right here. Now you have 150,000 profit minus 150,000 donation
Mm-hmm.
equals zero. What's 0 times 0%? The magic number is 0. Technically, it's invalid, but it's 0.
But
That's
you
how it
need to
works.
spend that money into nonprofit expenses, right?
Exactly. That's right.
Okay.
That's
So
right.
I think to play our cards smartly in this game, we need to understand what is taxable under which trust in order to
Mhm.
anticipate and plan the year out. And then
That's
that
right.
leads to my next question, which is most of my income comes from a W, right? I work
Mhm.
for someone, so I'm a salary-based employee. So while I
Mhm.
have few businesses, I'm not making big money. I'm not spending big money. So how can I still make benefit out of this trust if I establish these three trusts?
That you have your primary source of income is W-2 income.
Mm-hmm. Mm-hmm.
Yeah,
But
it's not going to work too
I
well.
do have quite a money saved in my
Uh-huh.
life, and
For
I
sure.
have them in investments and things like that. So how can I write that? You know what I mean? Write off things like that, like gains on investments and bonds and stocks and all these indexes and things like that. How can I, take advantage of this?
Yeah, it's a great question, Anna. So what we would do is we would do a hybrid strategy for you. What we would need
Mm,
to, number one, we need to create a business for you, an
mhm,
LLC, right? So we would need to shift more ownership to your personal return,
uh-huh.
because the W-2, unfortunately, it doesn't work with the business trust. We can't put our W-2 income in a business trust. We can't
Exactly.
put our W-2 income in a family trust. We cannot put our W-2 income
Mm,
in the ministry trust. And unfortunately, everything that goes in the trust no longer gets offsetted on our personal tax return anymore. So what you want to
mm,
do is you want to increase the allocation of your personal return. You want to increase your personal ownership of the business, the LLC, to
mm,
it being more owned by you
mm,
rather than it still being owned by the trust. The trust still owns it, right? But
mm,
you want to allocate your income, your basically, you want to allocate more of your ownership to you. And
mhm,
that way you can have a net business loss potentially
mhm,
from, let's say, your
mhm,
family trust,
mhm,
right? Or the business trust. We can do the business trust as well. Let's just say we just take the business trust. And
mhm,
now you can use the loss on your business trust, or the loss from your LLC that's allocated to you, to offset
mhm,
your W-2 income, so that your business losses offsets
mhm.
your W-2 income. And now you get a tax refund basically on your W-2.
Okay, I see. And this
Exactly.
this leads to my last question, which is if I have three trusts, I need to file three times taxes, or I can combine the three trusts in a single form. How it works?
Yeah, great question. But unfortunately, it has to be three separate tax returns. Keeping in mind that the ministry trust does not have to file a tax return.
Oh, okay, perfect. I'm done. Next, thank you.
Yeah, no problem. Appreciate it, Anna. Definitely appreciate the question. Great questions indeed. And Anna, you're somebody who would benefit tremendously from completing that quick questionnaire, which I just dropped the link in the chat again. We would love to work with you, hold your hand, work with you one-on-one. because this stuff can get pretty complex. All right. Thank you, Anna. Great questions. Let's go to, hopefully I'm saying your name right. Zerna. Please excuse me if I'm not saying your name right.
Yes, Serna.
All right. Thank you, Zerna. Go ahead, please.
Building on up on what Anna was just talking about the W-2 income. So if I have W-2 income, would I be able to donate to my ministry?
Wow. Okay. That's the $1 billion question in the room. What happens when you donate to your ministry out of your personal name
Correct.
instead of your trust name? What you can do, Zerna, is you can claim a charitable contribution tax deduction now. That goes on your Schedule A, itemized deductions on your 1040 tax return due by April 15th. And you would be able to now offset your W-2 income up to 60%. Up to 60% of your W-2 income can be offset by donations. So if you made 100,000 in a year, or let's say your W-2 income is 100K, and you're generous enough to give away 60K, then you only pay taxes on the 40K, basically. Of course, you gave the money away, but you gave it to your own ministry trust. So yes, your own deductions, your own donations to your own trust, assuming you have to do it from your personal name, are tax deductible as a charitable contribution deduction. All right. Does that answer your question, sir?
Absolutely. You
Yes,
answered the 60%, which was my next question. Okay.
absolutely. Sounds
Perfect.
good. Yeah, anticipate the next question before the previous
Yeah.
question.
You knew
Yes.
where I was going. So just to
Yes,
verify,
indeed.
so if I have a holding company that's just holding assets, even if everything is zero, I still need to file a return for those holding companies.
You're
Zero
talking
income.
about trust holding companies?
Yes, I'm sorry. Yes, trust holding companies.
Yes, you do. Even if it's zero, even if you did nothing during the year, because the IRS wants to know, they trust that you created this trust. And so they're expecting the same level of trust back, in that you're going to report your income and expenses of the trust, even if it's zero.
Okay. And so here's the
Absolutely.
next question. So when I have a
Okay.
business and the business is an LLC, the LLC has to file a return, and then the trust with the K-1 distribution needs to file a return, correct?
That is correct. You would have 3 tax returns: one for the business, the LLC, which is a partnership tax return, one for the trust, and then one for you, assuming you only have one trust. So it would be 3 tax returns in that scenario. And yes, the the business would issue a K-1 to the trust for the 98% ownership, and then to you for the 2% ownership.
But then I'd also have to file one for the family trust.
Exactly, that too. That's
Oh my
right.
goodness.
Yeah, it can be a lot of tax returns for sure, but it's all worth it. Trust me, it's all worth
Yeah.
it. All
Okay, I
right.
think that was all my questions.
Sounds good. Thank you for that, sir. And by the way, any advisory fees, any tax preparation fees, anybody you hire, Christina Yvette's team, for example, that is also a tax deductible business expense. So by investing in your education, by investing in professionals, you do get to write them off as well. All right. Let's go to, we got an iPhone in the room. If you can please maybe say your name. Can please unmute yourself. Looks like you have your hand raised. iPhone.
Yes, hi. I don't know, for some reason, I'll fix it. My name is Ray. Hi. I have a
Absolutely.
question about home ownership and having your property. For example, if your houses or you have like homestead um, exemption, or those all exemptions you're saying, once the property goes into the irrevocable trust, you no longer, they will take them back. Is that what I heard? Or should you put your house in a maybe a revocable trust, get everything settled, and then transfer it to the irrevocable? Do you understand what
Yeah.
I'm saying?
Yeah, no, that's an amazing question, right? That's one of those $1 million questions. At the end of the day, some things are a cost of doing business, right? Sometimes we don't need that deduction. That, I mean, yeah, it sucks to pay the property taxes, and yes, counties like Cook County, in Illinois have raised property taxes insanely. So yeah, that exemption does become very, very important. But pretty much sometimes some things are just the cost of doing business. So if you have the choice, the option to buy a property and have it owned by your trust from day one, please get it owned by the trust from day one. It gives you good privacy. Nobody knows who owns the property anymore because it's going to say your trust name as opposed to your personal name. And then, of course, it gives you the tax benefits and everything. And so I would say that, if you have the choice to just keep it in your, like, start it from day one owned by the family trust, please own it by the family trust, essentially. But yeah, the county gets to determine. They may basically say, hey, yeah, you're not eligible for the exemption, but you should be eligible because your driver's license would still have your address on there. And most states, most counties, that's all that's required, basically, is just the address being on your driver's license.
Okay,
Right.
so there's no need to do it before putting it in a trust. It's just go
Right.
full, put it in a trust, leave it
Exactly.
alone.
That's
Okay,
right.
thank you very
That's right.
much.
Yeah, no problem. No problem at all. And we're coming up short on time. I do know we got quite a few hands raised. Please, right. Sometimes some things, it just makes sense for us to meet one-on-one, for us to have a more, intimate conversation, a more direct conversation. And so please use that link in the chat. If you're looking to work with us, it just takes 1 minute. It takes 1 minute. You can fill it out as you're listening to this now. If you want, just real quick. Right. And that's how we can work with you. We can guide you. We can be your professional in your corner, because these things can get very, very complicated. Albert Einstein, one of the most intelligent individuals on the planet, said the most complicated thing on the planet is the income tax. He said it another way. The income tax is the most complicated thing on the planet. And this is coming from a true genius. All right. So this stuff can get very, very complicated. We can work with you. We can help you. And ultimately, we work together with Christina's team as well. All right, let's hop in the chat real quick. Let me just do a fire off on these questions. What is a 990 form? It's a form used for charitable organizations, nonprofits, 501c3s, 501, any 501, 50 organization. They use a 990 form to report the income and expenses. It's usually for non-taxable entities. And a church, a religious organization, does not need, it is exempted from filing the 990 form. It is a form used for charitable organizations to report the income and expenses of the charity. Anna says, or Ricardo says, out of the 508 trust, right? Same thing here. 508 trust does not have to pay taxes nor report. The trust 508 does not have to expense it out. Yes, indeed. Thank you for that, Ricardo. And hopefully I'm saying your name right. Najma says, what is nine? Yep, same up there. The difference between the 990 and the 1041. The 1041 is the form you use for your irrevocable trust, your business trust, and then your family trust. All right, not the ministry trust. The ministry trust, if you opt for it, you file the 990. In the history of working with clients, I've never had a client opt to file a 990 form when they don't have to, basically. All right. Yes, indeed. And so that would be something to keep in mind. And let's see. And yeah, hopefully everybody's able to use the link just fine, right? But that is pretty much how we work together. And I know we're up on time. Christina, do we have maybe like 2 minutes to answer other questions? Let's get a mic check on Christina, please. All right, Christina might have stepped away for a second. Let's go real quick. Ricardo, please ask your question.
Yeah, how's it going, Jeff?
Doing good, Ricardo.
Yeah, so my question was on personal life insurance. I was planning to put it under the family trust, but what is it going to trigger a tax event in case we pay out that distribution to its rightful owners? Or
Yeah, that's a great question. So basically, the life insurance, and keep in mind, whenever we're dealing with life insurance, we never want to distribute the money, right? We're doing policy loans from ourselves to ourselves. We're doing policy loans from ourselves to ourselves. And so let me share with you a note. I believe I have it in here. But basically, the trust can have So the life insurance premiums, and this is extremely important to take note of. Life insurance premiums are tax deductible by the business if the business owner or the spouse or dependent is the beneficiary of the policy. All right. And so with that being said, basically if you name yourself as your beneficiary of the life insurance policy or your beneficiary, right? Your beneficiary, then ultimately your business now can claim that as a business tax deduction. This applies to any policy, by the way, and so to extract some of that money out with life insurance, for those who are aware of it, you do it through loans, policy loans, from yourself, from your life insurance policy to yourself. Basically, that's how you can extract money from a life insurance policy. And then who pays it back is your death benefit upon death, basically. Right. Does that answer your question, Ricardo?
Yes, it does.
Yes,
Thank you.
indeed. Yeah, no problem. Thank you for that, Ricardo. Christine, do we have maybe 2 minutes for our last set of questions?
Yeah, absolutely. Thank you, Jeff, for your flexibility.
Absolutely. Yes, indeed. No problem. The last shall be first and the first shall be last. Let's go to Jerry, please. Last question.
Hi, thank you very much for this information. My
Absolutely.
question is,
No problem.
I'm a little confused about the filing. If I have an
Mhm.
LLC that is owned by the trust, and
Okay.
you have the business trust, I'm speaking
Mhm.
specifically the business
For
trust.
sure. Mhm.
I thought I heard you say, and let me qualify it. The business the business itself is a single member LLC.
Got it.
So
Okay.
filing the 1041, I thought I heard you say something about filing a partnership.
Yeah,
Would it
so
be a
let me
partnership? Okay.
let me just step in really, really quick. My apologies for cutting you off. But the moment you hear the word single member LLC,
Mhm.
partnership is completely out the door. The partnership applies to those who opt to have themselves personally own, let's say, 2% of the trust. I mean, of the business of the LLC, where
So let me
98%.
clarify another
Mm-hmm.
question. So,
Mm-hmm.
can I, even though I've transferred the ownership of the trust, the ownership of the business into the trust,
Mm-hmm.
and filing the 1041,
Mm-hmm.
can I file as a partnership? Is that an option, or should I keep it as 100% ownership by the trust?
Yeah, I mean, if you can keep it owned by the
What's
trust.
the advantage of doing that?
Yeah, so basically, yeah, I mean, if your advisor has advised you to keep everything 100% owned by the trust, and yes, that's what you should do. And the benefit, I mean, there's no real differences there. This is just a legal thing. It's more of a legal matter. But basically, you now would not need the partnership return. You don't need to file the 1065 partnership return anymore. That's due by March 15th. You don't have to do that anymore. You just put everything on your 1041. You use the Schedule C of the 1041. Right?
Okay. Okay.
Absolutely. So what I said that would not apply to you, Cherry.
Okay. Thank
Absolutely.
you.
Sounds good. Yeah, no problem. All right, all right. Once again, definitely appreciate everybody for joining. Please, right? This is very complicated stuff. Would love to continue working together with anybody, right? Anybody that needs help, please use that link. It just takes 1 minute, maybe 2 minutes most, to just jot down some information, let us know who you are, how we can help you, and then we reach back out to you to see how we can engage in services. Real quick, we got some quick questions here. If there is a mortgage, can you put it in a trust? Yes, you can. Just, you want to confirm with the lender as well. Can the trustee be listed as the fiduciary on the 1041? Yeah, it has to actually. It has to. I'm not sure what we mean by frozen, but last question, can you put multiple people in your asset inventory list who have different life insurance policies? That may be a better Christina Yvette question. And so speaking of Christina Yvette, I'll go ahead and pass it back to her. Definitely appreciate the time today. Appreciate everybody for joining in today. Once again, it's not about the information you've listened to that truly makes the biggest difference today. It is about the actions that you take. And so my advice, one action step that we can take away from this is to click that link in the chat, right? Let's get a meeting together. Let's see how we can customize this specifically to your specific situation. Because at the end of the day, you hear a lot of this information. It may apply to you, it may not. The only way to know is to schedule that consultation and let's see how we can work with you one-on-one. So appreciate everybody for joining. And thank you, Christina, once again. Happy MLK Day in advance, everybody. And thank you once again, Christina.
Thank you so much, Jeff. I appreciate you so much. And I know that everyone here in the community also appreciates you. You are a wealth of knowledge and you have really just like opened up our minds in a whole new level. So you educating us and answering our questions we're like fully grateful for that. So thank you so much. Jeff comes every single time that we have a workshop and he is your go-to person when it comes to taxes. Okay. So for all of you entrepreneurs, you go to Jeff. For all of you trustees, you go to Jeff. Jeff is the go-to person, him and his team. Okay. And so a lot of our community members, Jeff is the CPA that prepares all of their taxes. So we trust him, and he is the person that that we recommend. So go ahead and click that link so that you guys can go ahead and fill out that form. It's just going to take you a minute, and you can have access to Jeff and his team. Thank you so much, Jeff, and happy MLK weekend.
Amen to that. Thank you, Christina. Y'all take care. Thank you. Thank you. All right.
Thank
All right.
you. Bye. All right. Well, that just filled my cup. How did everybody feel about Jeff's session? Let me know. Let me know. You guys
Did
can
a
come
wonderful
on.
job. Jeff did a wonderful job.
All right, awesome. I love to hear it. Look, I see nothing but hands clapping. I see the hearts. I see everything. I am so happy to hear that. All right, perfect. So I want to open up the floor for Q&A so that I can answer all the questions that that you guys have based off of the information that I provided. So today we were talking about asset inventory and protection. So if you have any questions for me, please go ahead and raise your hand. I know that there was a question about the insurance and the asset inventory list. So you should only be listing insurance policies that you plan on like putting inside of the trust. So you can list all policies, but if you want to just have the asset inventory for trust documentation purposes, which is what we use it for, then you only want to put the policies that are owned by the trust. Now, all policies should be owned by the trust. And the only reason that would be is if those people are associated with the trust. Okay. So without further ado, next we have Leviticus, and then I will check to see if there's any questions for me in the chat.
Good day, Christina.
Hey.
That was some great information, very empowering once again. Great information. I'll make sure I link up with Jeff. He actually done a splendid job.
Yes.
And your
So
team
glad
is
to hear
just
that.
so your team is just fascinating.
Thank
I
you.
would actually definitely utilize all of them.
Yes, 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 I
Uh,
know. And you're gonna meet
uh,
two of our educators next week, so hang in tight, Leviticus, okay?
okay,
I'm gonna
absolutely.
introduce you to everybody.
Okay, that sounds great. I appreciate that.
Yeah,
All
but
right.
there's only so much that we can do in 1 week, so that's why we only have a few educators come in for the workshop.
Okay, gotcha. Appreciate that. So the one question I have is just one question. So when we have grantors, trustees, co-trustees, and beneficiaries, when they're included inside of a trust, are they protected? They get benefits like the trustees of the trust? What does it do for them when they are a part of the trust?
Okay, so when you say protect it from what? So, and who are you talking about exactly? Like board members or
Yes.
beneficiaries?
Yes,
Okay.
board members, beneficiaries. So how would they benefit in their positions?
Right. So they're not designed, so like trustee, no, excuse me. So secretaries and treasurers, they're not designed to benefit from the trust. And
Okay,
as far as like protection goes, there's no way for the trust to truly like protect them if they have things going on individually or personally.
okay, great. So that's why it's good for them to actually have a trust set up as well, correct?
I absolutely agree. Absolutely.
Okay, okay,
Each one, teach one. I already know
right.
that you're like, yeah, I already know what you're doing. You're helping your whole squad, your community, the whole group, and that's why we're here. So yes, go for it.
Absolutely. Okay, I
Yes.
appreciate that. Thank you. That's all I have. Hey, you enjoy the rest of your day and have a great Friday. And happy Martin Luther King to you and everyone. Enjoy your
TG,
day.
I have. Yes. Thank you, Leviticus. I appreciate
Okay.
that.
All
Yes, we
right.
got a
Take care.
beautiful long weekend. I need this long weekend
Absolutely.
after the long week, to be honest.
Absolutely. Absolutely. Yeah, you do. You do.
Yes.
Okay.
Yeah. Thank you.
All right.
Let's see here. So,
Christina, my apologies. I really don't know how to raise my hand.
oh, it's okay, Miss Debbie. You go for it. You answer your question. You ask your question. My apologies. I'll be able to answer it. I'm just looking in the chat right now.
Um, I'm a little confused when it comes to the grantor. For example, uh, when you are doing let me see, I wrote this down. When you're creating the quick claim deed, okay, of course you have to be the owner of the property. So you're saying that you are the grantor,
Of the deed.
deed,
Of the deed, and the deed is the deed to your property.
deed to my property. However, when doing a trust, I'm a little confused because
That's a totally different grantor, and that's the grantor of the trust. Two different people.
so do you have to own the property as the grantor to grant it to?
No, so you're getting confused with the with the titles or the labels, and I am so sorry, and a lot of people are in this position where they get confused because they automatically see the word grantor on the deed of the real estate and they automatically tie it in with the grantor of the trust. These are two separate contracts, so please treat them separately. So your deed to your property has nothing to do with the deed of the trust. Okay, so when we're talking about the real estate and we are referencing grantor and grantee of the deed to the property to the house, it's two people, right? And so the grantor of the house is the homeowner. So if you just allow yourself to exclude the grantor of the trust, then you'll be able to like digest this information a little bit better. So you have a deed to your trust and you have a deed to your house. These are two different deeds and they have two different grantors, and the grantor is not the same. So you're choosing a grantor for the deed to your trust, and the deed to your house is the person who owns the house. So that's what you're putting on the deed.
I understand that. I do have some clarity, but I'm still a little confused because when I create this trust, I would like to be the trustee so I can have some control over the trust and how it operates. I didn't want to be the grantor of the trust because the grantor has no power
And no
to.
control. Okay. Okay. So now, initially your question was about real estate. So are we moving away from real estate and now we're talking about the trust agreement?
Correct. Because I
Okay.
understand the real estate part.
Okay, all right, so we're done with the real estate. So now when we talk about the trust agreement, you have the grantor and the trustee. And so these are, two individuals, two parties. And so if you would like to be the trustee, then you're going to express that in the agreement. So it's going to be two individuals, right? You and someone else. And so that other person is going to decide, hey, I'll be the grantor. And then they will decide, hey, you be the trustee. And
Right.
then, and that's going to happen verbally. And then it's going to be expressed on the contract that you're setting up. So no one said that you can't be the trustee, but just make sure that you have someone else available for you to set up the trust with, because you can't set it up by yourself, which means that you can't be both parties. So there has to be another living, breathing person, and both of you collectively are going to decide who's the grantor, who's the trustee.
So for example, you say you couldn't be my mother because we are relatives or too close?
Too close, yeah, because the trustee cannot be subordinate to the grantor, and at one point in time in your life, you were subordinate to that person.
So another thing is when I apply for the what is it, the EIN number?
Yes, ma'am.
So the grantor has to be on there, and the grantor has to give up their social security number.
That's
So
correct.
it would have to be a close friend. But
Correct.
I'm a little confused because I had confused myself because I thought the grantor had to be the grantor, but they're two separate um, things we're talking about, two different types of grantors. Okay.
Right. Yeah. So it's just all in the verbiage that's used on these instruments or contracts or
No.
deed.
So one has nothing to do with the other. Okay.
So if you think about it, your property has nothing to do with the trust as of right now, right? As of today, right now, your property has nothing to do with the trust until you go to prepare the deed and put it into the trust.
Right.
Mm-hmm.
I did have a question for Baidu. I guess he didn't have time to read it, but I was really concerned about how much his services cost because I did talk to someone and I just need a little clarity on that.
Okay, well, if you're able to click on the link that's inside of the chat, then a member of his team will be able to reach out within 24 business hours.
I'll try it again. Thanks.
You're welcome, Miss Debbie. All right, and next is Shirey. Hi, Shirey, how are you?
I'm good, Christina. How are you?
I'm fantastic.
Welcome home.
Thank
Sorry I
you
couldn't
so
go
much.
with. I really, really, really wanted to go. What?
It,
So maybe
it,
next
it,
time.
Yeah, it was absolutely beautiful, but don't worry. We will have more opportunities in the near future. So we're talking about right now, seeing if we can plan a trip for 2026 and what country it'll be. So if we're able to get everything coordinated, then I will be inviting all of you all on the next trip.
All right. Thank you.
You're welcome.
I have two questions.
Yes,
The first
ma'am.
question is, can the board members be the same for all three trusts?
Yes, ma'am.
Okay, great. Second question is, and all of this is beginning to sink in. I still haven't completed, but I'm glad you have these invites to come back. The second question is, although I currently have a single member LLC, if I transfer the ownership of this into the trust and choose to do the partnership, like Mr. Badu was talking about, 2% I own and 98% owned by the trust. Who goes on the amendment? Do I just add the trust onto the amendment of the state? And is there an advantage to doing that? You understand
So,
the question?
so if you decide to move forward and to keep your LLC as a partnership, then your name is still going to remain as part owner, and
Okay,
it's still going to be on the public records. And then all you would do is you would process the amendment to add the trust as the other part owner of the business.
okay. So it's no advantage. So I'll just keep it off.
Yeah,
The
so it
advantage is just keeping my name out of it.
so I will tell you that it depends on the business. So there are certain businesses that are attached to business licenses, and the person who holds that license is an individual. So, for example, think about like a medical doctor, and you have like a clinic, right? So that doctor has to remain on there because it's his license that actually allows for the clinic to run as a business. And so, unfortunately, he would not be able to remove himself 100%. And so he would remain as 2%, and then he would have the trust remain as 98% to show that, that he's part owner. So it
Okay.
depends on the
That's
business.
the business, yeah. My
Yes, ma'am.
business consulting. I do construction and engineering services. So I can keep it off because I'm not licensed.
Okay.
I'm
Sounds
certified, but I'm not licensed.
sounds good.
Thank you very much. I appreciate you.
I
Have a good
appreciate you. Thank you. Thank you so much. Next we have Lily.
Hi there. I am
Hi.
so happy to finally be able to speak to you. I was trying to
Yeah.
raise my hand and it kept going down. How
Oh, I'm
are
so sorry. I'm well. How are you?
I'm excited. I joined yesterday. I was able to actually get it, so I got two of the classes, which is really exciting. But I did have some questions that we have.
Congratulations.
Thank you. I'm
Congratulations.
really excited. I've been watching you like for over a year, binging on popcorn and just watching your video. I'm excited. This is so much that
Yes.
I wanted to ask. Um, But I just wanted to limit it because I started my business this year, did not make a profit yet because I was trying to get my trust going on. So when I do my taxes, I just put 0 for the LLC.
Okay.
That's what I do. Is there a certain form that I fill out to do that or how?
Yeah, so our CPA came on and he said that the form for the trust is the 1041. And if you are referring to the LLC, then it just depends on how it's structured. But typically, it'll go on the Schedule C of your
Okay. Yeah, we'll
1040.
see. All right, so I'll do it. Yeah, because what I'm gonna do is I'm gonna go ahead and change and put the trust under as like what you were doing earlier. That's what I
Yeah.
wanted to do the amendment and fill that out and set that up. Well, I'm excited about it. Now I wanted to ask you a question because I wanted to go ahead and transfer the house as well. So I did that.
Okay.
With the homeowner's insurance, do you have to opt out and get a whole new homeowner's insurance and put the trust under it? Will that accelerate any type of, due on sale clause doing that or no?
Okay, that's a good question, and it's a two-part question. So the
Oh,
first
good.
part is you have to update the homeowner's insurance so that you're able to have the trust be the owner of the policy. And
Okay.
then, so you don't have to get a new policy. The
Oh,
policy will
good, good.
remain intact. Yeah, that's wonderful. And then as far as the due on sale clause, that's applicable for the mortgage lender. And so the due on sale clause is if you transfer your property from your name into an LLC or from your name into another natural person's name. So it doesn't trigger the acceleration clause if
Good.
it's transferred from your name into a trust.
Okay, so it's just do the quick claim deed. But like he said, if we do that, we may lose our benefits with the homeowners insurance. So we have to contact them and let them know that uh we're still beneficiaries. Is that how we do? Or we're working with the
So
trustee?
that would, yeah, so that would be the process for the homeowner's insurance, but it sounds like what you're talking about is the homestead tax
The
exemption.
homestead tax. Yeah, that was my other
Yeah.
question. Yeah.
Yeah, so with the homestead tax exemption, it is county specific, okay? Every single county is different on
Okay.
their policies and procedures when it comes to applying for and qualifying for the homestead tax exemption. So some of your exemptions will remain intact, and some of them will be triggered when you transfer the deed. It will trigger the county to remove it. And so there is a form for, and so I can't say that this is applicable with every single county, but majority of the counties will have a form on their county website for when you transfer your property into a trust, because it is a common thing, right?
Mhm.
A lot of people, they'll have, living trust, for example, and they'll transfer. And so if you want your homestead tax exemption to remain intact, then you just have to prove that it is still your primary residency.
Oh, okay. Well, that's perfect. See, that's good. And that pretty much what the questions that I had to do. And
Yeah.
looking about the ministry test, I'm not a minister, but I am a Christian. So I don't know how that would work to actually go ahead and set that up. It's for educational, right? For you could also use.
So it could be charitable or education or religious. So you'll choose how you want to operate it. So if you're operating it like religiously, then you'll either operate it kind of like a church or a ministry, right? So you'll choose. If you want a church, you can have it. If you want a ministry, you can have it. If you want to do educational, then you'll set up a school, right? Or you'll just provide educational programs. So like a lot of our community members, they have programs for minors, or they have actual schools. So you can do it that way, or you can just set it up as a charity where you're just, providing charitable services and philanthropic services to the community. So you just have to choose how you want to operate it. Now, if you want to become ordained, I did show the steps. And so if you access the recording from Wednesday,
Yeah,
you'll
I did see that. Yeah.
Okay,
I
yeah.
got.
And so if you go to uoc.org, then you can just go through the online ordination process if you want to do it virtually. And it's a free process for you to become ordained if you want to go down that direction.
Yeah, no, that's okay. But I
Yeah.
appreciate that. I know that some other people there too, and I don't want to take up everybody's time. But thank you so much. I was just
You're
excited to
welcome.
hear you, and my husband's with me, and we've been hearing a lot of information, so it's a lot to do. And I'll go ahead and listen to the rest of the three that I missed Monday, Tuesday, Wednesday.
Okay. Well, I'm so glad that you're a part of the community now. So
Yeah,
thank you
me
so
too.
much. Yes, and I look forward to helping you throughout this whole process.
Thank you so much. I do appreciate that.
You're
Okay.
welcome. All right, and then next we have Najma. How are you?
Christian, I am just so wonderful this past week. This is excellent. I'm so glad I got one. Thank you for the invite, and thank you for allowing me to do the done for you. But
You
I
are
have
so
a couple of questions.
welcome. Yes, it's a blessing for you to be here. So thank you so much for being here.
And I'm so glad I was going to get on here. Let me see if she's real or AI.
I know, and you know what? I have gotten that several times where people think I'm AI. I wonder why. Yeah, several people have told me that. They was like, yeah, I saw your videos and I wasn't sure if it was a real person, so that's why I'm calling.
But I don't know if AI changes clothes every day.
Yeah,
But
I
I have a
know.
couple of questions for
Yes,
you.
ma'am.
In regards to the grantor trustee relationship, my son wants to be the grantor and I the trustee because he can never be subordinate to me. Can that work?
It can work. Just know that you will be locking your son out of the trust because he cannot be a beneficiary. So people will they won't choose that as an option because typically they want their children to be the beneficiaries of the trust.
Well, he's the grantor. I mean, he's the one really starting by putting the trust together, and he's
Okay.
paying for it.
Okay, so does he know that he doesn't have any power and control? So when you choose a grantor, they have to know, and they are affirming that they know that it is irrevocable. They have irrevocability where they have no power, no control, and that they won't have any beneficial interests, so they cannot benefit from the trust. So if he's
Okay.
aware of that, then it's okay. I'm just letting you know that typically people won't assign their children as the grantor.
Okay, I'll make sure that I go over that again with him. Is the grantor the only one who can put assets in the trust? So say, for instance, I want to add something to the trust asset list. Is the grantor the only one who can put assets in the trust?
No, anyone. So
Technically.
yeah, so it says inside of your trust document that anyone is able to add assets into the trust with the trustee's approval. So the
Oh, with the
trustee
trustees approval. Okay.
Yes, yeah,
Okay.
right. So yeah, we can't just have a random stranger, come out of nowhere and add property, right, without approval. Uh, so it has to be with the trustee's approval, and so that can be
Mhm.
anybody, right? So that can
Okay.
be the trustee, that can be beneficiaries, but usually it's not. The trust is not designed for the beneficiaries to place their assets in the trust. So, yeah, so the grantor is only required to put the first asset in the trust. And so that could
Okay.
be a certain dollar amount, that could be an insurance policy, that could be a piece of real estate, that could be some cryptocurrency. So whatever it is that they choose as the initial consideration, that's the only thing that they're required to do.
Okay, I got it now. Okay. And as far as the home having a mortgage still on it, how does that process work?
So your mortgage is going to remain intact. It's going to remain in your personal name and on your credit if it's currently on your credit report. And all you have to do is just update the lender to know that you're assigning a different payee to be able to pay the mortgage, and that's going to be the trust because now it's going to be the financial responsibility of the trust to make those mortgage payments.
Okay, Christina, thank you so much. It's been a wonderful week again, and happy Martin Luther King Day to you, and welcome back.
Thank you so much. I appreciate that, Ms. Najma. Thank you, and happy MLK weekend to you. Thank you so much.
Thank you. Have a great weekend.
Thank you. Ms. Nandi, how are you? I know
Good,
how are you?
good. How are you doing today?
I'm
Oh, my
fantastic,
hair.
beautiful.
Look, I was trying to find out almost basically the same thing what they just asked. I was concerned about the mortgage and the putting the house in the trust. You put the house in the trust, but the mortgage stays in your name. Is that
That's,
correct?
yeah, that's correct. Yeah, the
Okay.
only way that it would be in the name of the trust is if you refinanced. And
You
so
have to
typically,
refinance to get it,
yeah,
the
and
mortgage put into the
yeah,
trust itself.
yeah, typically we're not opting to refinance because then with a
You have to
refinance, the
refinance the
trust,
whole thing.
yeah, and
Yeah.
the trust has to qualify. So that means the trust has to have income, things of that nature. And so that's not the process that we would typically go through. But some people have gone through that process because they wanted to remove their mortgage from their credit report
Yeah.
and wanted that debt to come off of them personally and to be moved to the trust. So it just
See,
depends
that's what
on
I was thinking too until I was listening and I said, okay, so the mortgage actually, it will not be able to be where they could see it in your name, but it's still going to be on your credit report.
Yep,
Is that right?
absolutely.
Mm-hmm.
Yep, correct.
Okay. And you'd have to get it refinanced. And if you almost finished paying for it and to get it refinanced makes no sense.
Mm-hmm. Yeah, I
Okay.
know. Yeah.
All right. Well, that's it. That was it. Thank you. Have a good day. Have a good weekend, everybody.
You too. Have a great
All
weekend.
right.
Yes. Let me see. So I see a question in the chat that was asking about the state. So the business trust does not have to be in the same state as the LLC, if that was the question. And then let me see here. We answered that question. And yep, answer that question. And Cookie has a question, and let me see if there's any questions. Someone asked about the affiliate program. So we will put the link inside of the chat for the affiliate program. We do have an affiliate program. And so if you want to apply to become an affiliate, all you have to do is give us your name and your PayPal information. We will give you a special affiliate link, and then you can share that with your friends and family. And if they decide to enroll into our program, then whatever they pay for their enrollment, we will give you 20% commission. So that is what our affiliate program is, and everyone is welcome to join and become an affiliate if you want to share this program with your friends and family. It's a win-win situation. So we will go ahead and put that link inside of the chat. And Cookie, you have a question?
Yes, Christina, how are you?
I'm well. How are you?
Good, good. The question I have is I know you have to have a separate ENI number for different trusts, but do I have to create a different virtual address and phone number for the for each trust? Or I can use the same virtual address and phone number?
So best practice is for the trust to have separate contact information.
Oh,
Yeah.
okay.
Yeah.
And the second,
Sometimes it's not economical, so it just depends. And it also depends on how you're operating the trust too. So I would tell you that you definitely want the business trust to have a totally separate email and phone number from the family and the ministry if you're, operating the business like a business.
okay. The second question I have is giving me a little pause is when because I was really concerned about the taxes for the house when you transfer it into a family trust. And if I heard Jeff correctly, he was saying it's 30%, 37% taxes when you put your house into a family trust if it's like $250,000. He did the whole scenario. So if I don't create a ministry trust or something to offset that, then I'm stuck with the high rate of 37%. Or is there
Um,
other way to do it? So
uh,
that's
so
really,
So he wasn't giving that example if you transfer your property. So he was just giving that example based off of income.
oh,
So
20, oh,
yeah, so it's 37% on income taxes. It has nothing to do with your property if your property is not generating income. So if you have a rental property that's generating income, then that's different. So I'm trying to understand, um, where the confusion is.
so the
So,
confusion is is I when you put your home into a trust, how much are you taxed on how much taxes do you have to pay on your home when you move it over into a trust? Because right now I don't pay a lot of taxes on my home and it's almost paid off. So I was just trying to figure out. And the first question I asked him, I heard that when you put your house into a trust, that your taxes go up. So I just was just trying to figure, is it beneficial for me to transfer it into the trust or not? I don't
yes,
want to get.
so his response to that question was that the um the county doesn't increase your property taxes because you transfer it into a trust.
Right.
Okay. So that is a myth. Just like another myth is you need $1 million in order to start a trust, right? That's a myth. So your taxes are going to remain intact, right? So whatever you're paying for property taxes, you're going to still continue to pay. So the only way that your property taxes are going to go up is dealing directly with the county if they decide to have some type of increase, or if they reassess the value of your house and now the assessed value increases, then your taxes increase. So it just because you transfer your property into a trust, it does not mean that your taxes are going to go up.
Okay. Thank you so much.
You're
Thank you so
welcome.
much, Christina, for the entire week. It was a great wealth of information. My cup is definitely full, but I definitely have to go over and listen to it all over again. And you'll probably hear me come into your next sessions whenever you give it again. So
That's going to be fantastic.
I'm
Yes.
excited.
Yes. One thing I wanted to tell you was that the trust is now going to be responsible for the property taxes, but it is very advantageous to go through the recordings to hear this all over again, because we just spent a whole week together, and it you guys are on information overload. And
Yes.
a lot of like even me myself, I had to stay within my time limit, and so I was talking very fast. And that was because I had to, because we have other educators that, are on time limits as well. So if you watch the recording, if you take notes, if you allow yourself to digest the information, then you will put yourself in a position to retain everything, and then you can move forward with, yes, I'm now ready to, to start structuring my trust indentures.
Right. Well, thank you so much. I really appreciate it.
You're welcome, Cookie. Thank you so
Have
much
a
for
happy MLK Day, and I'll see you next time. Well, next week when we have it on Thursday.
Yes, exactly. We're going to have a master class on Tuesday and Thursday. So I'll give you
Okay.
those details in just a moment. Next we have Serna. How are you?
I'm good, thank you.
Fantastic.
I have I guess, a multi-layered question,
Okay.
and it's regarding the transfer of vehicles. You mentioned about putting vehicles. This is for a business trust because I currently have a business that I'm going to be transferring into a business trust, but we have vehicles, so I understand putting those vehicles like in a holding company separate from the business. But I also have heavy equipment. We offer service, we own heavy equipment, and we have vehicles. Should I put those into three separate trusts? One that
Yes.
holds the vehicles where we transport, one that holds the vehicles, the heavy equipment, and then the other one provides the service.
Yes.
Okay, I just wanted to confirm that.
Yes.
So to add to that, if we have to get, let's say, new equipment, we're replacing the equipment that we have, the business service buys them and then we transfer them into the trust that holds the equipment? Or how would that work?
Yes. So the one entity will purchase it, and then they would gift it to the other entity.
Okay. Gifted. All right.
Mm.
And to confirm, holding trust, the trust that will be holding companies, they also need to have EINs, even though, well, yeah, because we will have to file a tax return.
Yeah, and you're going to maybe you're going to be having trust funds, and so you need to have a bank account if you're going to house trust funds for that entity.
Okay. Okay. That's all I have for right now. Thank you so much.
All right, you're welcome. Thank you, Serna. Next we have Ricardo. Hey, Ricardo, how are you?
I'm doing good, Christina. How about you?
Fantastic.
Well, it
Thank you
has
for asking.
been a great week full of information. Thank you for everything.
You are so welcome. Thank you for being here.
Yeah, so last night I opened my first virtual address. I guess my question is they offer different programs. One was like either personal and other was business. So will it be fine to open three of the personal ones for the trust, or do I have to open a business so it can reflect the trust name?
Yeah, so you want to open up a business so it could be under the trust name.
Okay, sounds good. That was my only question.
All right, sounds great. Next we have Monica.
Hi.
How are you?
Good, good. Thank you. Thankfully, I jumped on the right link this time.
Yeah, I'm so glad.
Appreciate it. All right. So another great day of information, lots of information. I wanted to piggyback off of one of the other ones that Zerna had, the one about the heavy equipment. So does that mean that we would have three trusts, like the business, family, and the ministry or education, plus the ones for heavy vehicles?
Yeah, you would have an additional one for the vehicles.
Okay, gotcha. And then for anyone being able to add assets into the trust, does that mean does it have to be somebody who's part of the trust, or can it be someone outside of the trust?
It can be someone outside of the trust.
Okay, got it. Okay. And sorry, one more question. What was it? Oh, so signing over the business, what if the person who's the authorized rep is the same person as the trustee, who's the buyer? Does that have to change before that is done, or can they be the same, the trustee and the rep from the business when you're doing the sale?
Yeah, it can be the same person and, the same signature. You just have to identify what your title is or your role.
Okay, gotcha. All right, that's all my questions for now. Thank you so much. Have a
All
great
right.
weekend.
You too. Have a wonderful
Thank
weekend,
you.
Monica. Thank you. Next we have Anna. Hi, Anna. How are you?
Hello, Christina. Yes,
Hi.
so I have several questions. I'm still like, I think many of us are still processing what entails some titles like trustees, board members, lender, or whatever. And uh, instead, like going over all that, I want to ask you more of a personal question of if I only trust my money in the hands of my two brothers, one lives in the US, the other one lives overseas. What role do you recommend they will play? And I get a little bit confused when I see emails about volunteers playing these roles, like board member, whatever, lender, and I'm like, why? Like I feel that trust is something that I need to trust the people I'm putting their names, and I feel very uncomfortable putting people I don't know, and even
No,
less trust my money. So, what do you recommend?
that is, I'm glad that you said that this is personal. So this is an isolated, very unique situation based on you. So you don't have to choose a stranger, right? You get to appoint who you want to appoint. So if you want to appoint your siblings, that is perfectly fine. And if you trust them with money, then you would appoint them as the treasurer because then they will be responsible for trust funds.
Okay.
So not everyone has siblings. And so there
Mhm.
are people that have no siblings and no children. And
Mm.
so how are they going to find board members? And so
Mm.
our community has volunteered. If you're in that situation where you have no siblings, no parents, no children, and it's just you, then I will volunteer to serve on your board.
I see. I see. Now I understand. I was a little bit confused about that. And then
Okay.
if I have two LLCs, you've been talking these days about, oh, it's better to have two because one can be for this, the other one for that. Can you please clarify about that? Because if I'm not mistaken, you mentioned if you have two businesses that they are not very different, or one is highly liable, the other one is not. you can combine them. I feel like I heard that. You can combine them into a single trust. But then people the other day were, I felt a little bit confused because they said, no, you're better off having two LLCs because you use this one to borrow money, the other one to do this. And I got then confused. And I'm like, well, I don't know what I'm going to do with the LLCs. So, how can I play my cards smartly when it comes to if I already have established two LLCs? I don't have DUNS, I don't have EIN numbers yet issued. So perfect timing this training. So tell me, what do you think?
So that's a really good question. It's all in the way that you're going to operate. It depends on the industry that you're in, and it depends on how you operate your LLC. Okay. So I don't tell people have two LLCs. That has never come out of my mouth. There are people who have
Okay.
multiple businesses, right? There are people in our community, I'm one of them, right, that have multiple businesses. So what I always mention is you want to have a degree of separation, meaning that you want to separate a high liability business from a low liability business. So a high liability business, for example, is real estate. Everyone here in the United States knows that real estate is considered high liability, right? Maybe a construction company, maybe a carrier company or a trucking company, right? Or even Uber, Lyft, all of those things, right? They're high liability, right? You have vehicles on the road, you have heavy machinery, you have, dangerous construction sites, right? Even a medical practice, right? You're dealing with patients, right? And so those are high liability businesses, and you don't want to put those high liability businesses into the same trust that you would put a low liability business, right? Like a consulting or a retail, online e-com store or something like that, that's low liability. So that's what I mean. It depends on the entity, it depends on how it's operated, it depends on the industry for you to be able to separate them.
Okay, perfect. And then my last question is, I feel a little bit, I'll be honest with you, I feel a little bit overwhelmed on the number of forms that I'm gonna have to start, and I'm like going nuts because I'm not a detail-oriented person. And I'm thinking inside of me, okay, if you have to file one separate for every trust, plus my 1040, plus, you say still you have to still file for the LLCs if you have LLCs. Then I'm thinking, is all this really worth it? Because I'll have to pay a CPA or someone, and I'm assuming my fees will go up big time, right, Christina? So I want to hear from you. You think this is really worth it? Because I'm thinking, how much is gonna cost me a year this filing thing process? And then how much of a tax break am I getting? You see what I mean? I'm kind of like trying to evaluate that. So I would like to hear your point of view.
So that's a really good question. Now, you setting up trust is not, only for tax breaks. You're setting up trust to protect your assets. So, for example, if you have a house, is it worth it for you to set up a trust that you obviously have to pay taxes on, right? You have to file a 1041, but is it worth it for you to set up a trust to protect that house? Is it worth it for you to set up a trust to protect that business? Right? It just takes, for example, one lawsuit for you to be wiped out $100,000. So would it have been worth it for you to pay a CPA? Let's just say you pay a CPA and you file, and then they file your forms and it's 800, 900, $1,000. Is it worth it to pay $1,000, or is it worth it to have a judgment of 100,000, or for your asset of 350,000 to be seized? So that's why it's like risk versus benefit. So, and especially if you have multiple assets, like real estate and a business is multiple assets. So You're thinking about it from tax advantage, and I'm thinking about it from asset protection. I'm thinking about it from longevity. I'm thinking about it from how are you going to pass this to the next generation? So are you okay with the fact that your children are going to have to go to probate and might potentially lose everything? Are you okay with that? I'm
But if
not.
you have a testament, right? You can get it, right?
They're going to have to go to probate.
Yeah.
So are you okay with that?
Yeah.
I'm not okay with that. I'm not okay with one day somebody saying, "Hey, you don't have a house anymore. Hey, you don't have a business anymore." I'm not okay with that.
But is that really like how often that happens, right?
Every single day. See, it's people like us that we believe it's not going to happen to me. That's the issue. We think that it's not going to happen to us. Do you know how many tenants have threatened to sue me?
Yeah, but at the same
And
time,
I'm
Christina,
walking,
no,
go ahead.
yeah. No,
So,
I was saying that you have a job that it might be how can I say? Like like I have like an under the radar job. I have a W-2. I'm an employee, a low risk job. Nobody will suit me because I don't even have much power or I don't play with people's money, right? I work for a non-profit. So my job itself is low level. I feel that if you have a business, if you got big money in terms of a business or properties, that you are more, and the nature of your job, that you have more probability that someone will lawsuit you, right? But in my case, I feel that the probability that someone will lawsuit me is low, right? So then I have to analyze, is it worth it for me to do this? Or is it more worth it to go through the trust later on in life, close to retirement? That's kind of like also something that I'm thinking about. How critical it is for me to establish the trust now, right?
Very.
I think. Oh, Christina, I don't know.
oh,
I
hello.
think yes.
Okay, that's a really good question. So let me ask you something very important.
Mm,
And this is like tough love, right?
mm,
So so my question is like, is tomorrow promise? How do we know that we're going to reach retirement?
yeah,
So
I
what
hear
is
you.
so
That
what
any day.
so what is retirement? Retirement is 60, 65, right?
Mm,
Can I tell you what my reality is?
mm-hmm,
I lost my mother at 61. She never reached retirement.
mm-hmm. I'm sorry.
So I
I'm
know
sorry.
the anniversary of her death is tomorrow.
Oh no, I'm
Yeah,
sorry,
she
Christina.
died 5 years ago.
Oh my gosh.
She never reached
Wow.
retirement. And I promise you, she didn't know she was gonna die. I promise you, I didn't know that she was gonna die. So a lot of
Mm,
us we think that tomorrow is promised and it really isn't. It
yeah,
year or
I'm
two
sorry.
or three or four. uh, this is the mistake that people make.
I'm sorry, Christina. I'm sorry. Wow. It must have been through the pandemic, right? Um, wow. Um, yeah,
Can
I
I say
guess.
something, Christina? I just wanted to give give her just a quick example. I just came back from seeing my family, and there was a dispute in the family. about a piece of property. The judge made the family sell the property and divvy up the money that the claimant said. And I think they all got maybe $10,000, $20,000. The property right next door was worth $2 million. That's because they had to go through the probate process. They were fighting and everything. And finally, somebody outside made the decision. So I just wanted to say that because it just happened. Sorry, thanks.
Wow,
Thank
I
you
didn't
for
know it was
that.
like that. Oh,
Can you guys hear me clearly? I'm so sorry to step out for 10 minutes. Can you hear me?
yes, yes.
Yes, we can hear you,
Okay.
Christina.
Okay, perfect. So
Yeah,
thank you so
take a
much for
break.
thank you for no, that's okay. So thank you. I really appreciate that because that's just trying to make, which is tomorrow is not promised. And this is the biggest mistake that we make is that we don't know when God is going to call our time. And so we think that we have all the time in the world to get our affairs in order. And people that they will wait until retirement. They will wait until they're in their old age. That is the biggest mistake. Like I set up trust when I was 25 years old, right? Do you know how many people die in their 20s? I set up my trust, one, because I had an asset, but two, because I had a son 20 years old. And so for everyone who's do not delay the process. Do not wait. And don't think that you're automatically coming up tomorrow. Every single time that I wake up, every single morning, I thank God for actually waking up. Because that night could have been my night. That I just don't wake up the next day. So it's all in our way of thinking and our mindset.
No.
Don't wait. Don't until retirement. Retirement might not ever come. And I don't mean to be so harsh, but the reason why is because like I have experienced so much death. Like my mother and her entire lineage, meaning all of her siblings, are expired. I had to perform CPR on my loved ones. I also have seen it from the standpoint of a cardiac nurse. Do you know how many patients came in for a simple procedure, didn't even know they were gonna die that day? So don't wait. And I really don't mean to make it about this, but it is though. Why, if you have health right now, you might as well set up everything right now.
No. And the testament is not enough. We need a will plus the trust, right?
No, you don't. You just need the trust.
Just
All
need
of
the trust. So
provisions,
once I do trust, I don't need to do testament or will.
you don't. Everything that you would put inside of a will, you put it into the trust.
Okay.
A will becomes obsolete.
Okay. Okay. All right. I think that those are all my questions. Thank you so much. And I'm sorry, Christina, that I made you remember your mom's loss. I'm sorry.
No, and Anna, you did not make me remember it. It is something that I could never forget. And every time that I put in today's date, I was triggered every single time. Because I know what tomorrow is. So I just wanted to mention it because this is a matter of life or death, and that's how you have to treat it.
Yeah. Thank you. Thank you so much for all your wisdom and expertise and for sharing it with the rest of us. Thank you. Wishing you a lovely weekend, MLK weekend.
Thank you. Thank you, Anna.
Thank you. Okay, so let me see who we have next. Oh, it's my beautiful Lisa. Hi, Lisa. You're still on mute. Lisa, are you able to get off mute?
I think it's winning. Broncos or Bills?
Oh,
Bills.
she said she doesn't know how. Okay. I'm not sure if it's the device. Do you want to put your question in the chat? Maybe you should exit the Zoom and come right back.
Okay, here I am. Oh my God. Hey, beautiful.
Yay. Hi. Hi, beautiful.
Hi.
How are you?
Oh, I'm doing awful, but thanks for asking. Yeah, there's been a lot going on.
Oh,
Yeah, like just that Anna talking about not doing it, like my situation. I said the C word, but anyway, you just
yep.
don't know. I'm telling you, I was in the hospital again. So, you just you can't think like that, you know what I mean? Because it's hard. And my mom died too, also, just like that. And we had to go through that probate and stuff. This sucks. And lawyer, you know what I mean? They're all crooked. So I'm very sorry about your mom too. But again, it happens and people don't think about that. You know what I mean? So anyway, I wanted to know, how was your trip? And
It's a part.
how was your trip, doll?
I said that part of life.
Yeah.
Yeah.
Sure is. How was your trip to Ghana, whatever?
And it's just.
Can you hear me? Hello.
Yeah.
All right, you were breaking up earlier, so.
Hold on.
Okay.
Hold on for me.
Okay. Okay. Oh. Yeah. Hmm.
I'm back. So, Lisa, you still with me? Are you guys still with
Yep.
me?
We're still with you, honey.
Okay, I'm so sorry. I had to step out and grab the little kiddos. But
Oh.
what I was trying to say, I was losing service. But what I wanted to say was transitioning is a part of life. So,
Right.
death is a part of life. We're all going to go through it. So we just have to be able to accept it.
Yeah. Some are
So
earlier than others.
yeah,
Oh, yeah.
yeah. And that's just the hard reality.
Yeah.
It's very sad, but it is something that is inevitable.
Right.
So I'm sorry for your loss as well, Miss Lisa.
Yeah. Yeah, it was a
And
bitch, but
I'm gonna be praying for your health. And you asked me
thanks.
about Ghana. Ghana was absolutely beautiful. I spent 20 days there and I love
Wow.
that country so much.
Wow.
I am like to the point where I'm gonna work on getting my citizenship because I want to have a
Nice.
second passport. I don't only want to be a citizen of the United States of America. I
Right.
also want to have, dual citizenship and have somewhere else that I can call home and another passport just in case,
Good.
anything happens. So I'm at that point, but it
I
was
got
beautiful.
I got a common law international one. You
Mm-hmm.
know, you can go all over the world with it. So
That's
anyway,
beautiful.
what I needed to ask. Now I'm gonna do a consulting with you. I need to talk to you because
Okay.
I'll be coming down soon. Down there, my girlfriend got a house, and she needs my help, so I'm gonna come down soon and help her. Well, what I can do. Okay, with the car
Sounds good.
now. Say I'm paying on a car. Just just financed it. I could put that in the trust also.
Not if it's financed because you have a
Okay.
lien holder and they have the title to the vehicle. So you have to just wait until it's paid off.
Okay. All right. And the grantor, she could put her house and everything, all her cars in there, as long as they're not under her name. They're already bought and paid for.
Yeah, they can. The grantor can put any assets that they want into the trust.
Okay, cool. All right. Yeah, because I did the fidelity, so it's like, they want everything. They want your social. It's like nothing's private because when I did do it in there, I already have accounts, like 4 different accounts in there, for investing and shit. But yeah, I gave the grantor the Social Security, but I didn't put mine in. But I gather they have it already with my other accounts, right?
Yeah,
So technically,
so with these financial institutions, they are going to ask for your personal information and they're going to create like a personal profile
right.
for you. And so they ask for that information because you're one of the authorized people in the trust.
So well, the business trust is where that's going in the
Oh,
FIDO.
okay. Yeah, yeah,
You know
yeah.
what I mean, right? I like to put them in all, but I told you I had trouble putting it in my TD bank. I've been with them for over 4 years. You know what I mean? Like you would think, because they're a trust company. Nope, they didn't. She took my whole trust, and I'm like, no, you ain't taking my whole trust.
Mhm.
So, and they still denied me on just the declaration of it. You know what I mean? The certificate. I'm
Yeah.
like, yeah, I don't know. I mean, I'm not doing anything different. And like I said, that revocable should just be for the commercial part. You know what I mean? That I deal with other people. You know what I'm
Yes.
saying? Yeah, with my sole prop. Okay, well, this is beautiful for the quotes. I'm gonna give you a couple of them, okay, for the last few days.
Thank you.
Okay,
Thank you.
here's I'm gonna do the 3. If we pause to think, we will have cause to thank.
Wow.
My life, yeah. My next one is my life is my message, and number 16. We can't all be shining
That's
examples.
powerful.
Right? I just said
Yeah.
that was for us. We can't all be shining examples, but we can at least twinkle a little. And
Right.
yeah, and tomorrow's is a baby is born with the need to be loved and never outgrows it. There's the
Wow.
next for the other one. But I've been coming in the community room and talking, but like I said, I was in the hospital for a while.
I know
Yeah.
you put in the telegram and we appreciate it every time you do. Thank you, Miss Lisa.
Well,
And
I love you, girl. You have
Yeah.
have a blessed rest of your weekend.
Yeah, I'm gonna pray for your health, okay, my dear?
Thank you, doll. I'll talk to you soon.
All right,
Did
5
you
and
say
5 seconds.
pause to think and what? Miss Lisa,
Oh, she said,
pause to think. You have cause to what?
Miss
I wish
Lisa, what?
Where are you? Pause to think. We will have
Thank.
cause to thank.
Oh, wow. Thank you. Thank
You're
you. Thank
welcome. You're welcome, doll.
All right, next we have Henry, and then I am definitely going into the chat for those of you guys that are not able to answer your raise your hand. Hey, Henry. You're still on mute. We cannot hear you, Henry.
Sorry about that.
Oh, no problem.
I was trying to be quiet and just let everybody communicate amongst themselves, but I feel compelled to tell just a quick story of why I'm here.
Okay.
I was sued and I lost everything. And when I say everything, I'm talking about a $700,000 house. I'm talking about 4 vehicles. I'm talking about my bank account. I'm talking about my life savings. Um, I believed in having 6 months of expenses put up, saved up just in case anything happened, lost a career and stuff like that. All of that was gone, and there was no protection for me. Then I had my third bout with cancer. Um, so I haven't had any income since 2020, since COVID. And as I told you, I think yesterday, I've been looking for a way to protect myself because I have children that are going to depend on me. So I would encourage anyone that would listen to anything that has been taught and said by you, please, 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 if you work hard to gain assets, do whatever you can do to protect your assets. Why do you think they've hid this from us for so long? Why do you think they were the only ones that were saying trust fund babies? It was because they were the only ones who were privileged to know this, who were privy to this knowledge, who was privy to this knowledge. Now we have it through Christina. And again, I thank you for your level of knowledge and for not being a gatekeeper and for giving us what we need to know in order to make this happen. So please, 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 if you endeavor to get anything in this world and to keep anything in this world, please protect them. Sweetheart, give me a second, please. Please, please, please protect it. Get your trusts. And I have no reason other than my knowledge and what I've been through. But the only reason I'm here is because I've been through it. So I would
Amen to
encourage
that,
anyone,
Henry.
do it.
Amen to that, sweetheart.
Thank you. Oh, we can't hear you, Henry.
That was it. That was it. I just wanted to encourage anybody. And if anybody want to hit me offline and they want to know more, if I can be of any kind of example and encouragement to me, please, I would be more, since I didn't put it all out there.
Yes.
I would be more than happy to tell you my story.
That is a powerful testimony, Henry. Powerful, powerful testimony. And you are a like living, breathing example of the things that, that we have to do. And a lot of people, they just think that it's not going to happen to them. We think that we are invincible until it happens. And so I'm so glad that you were able to share with us, because now I know that that testimony is going to encourage a lot of other people to know and understand that could be me. And so this is, so important. This is life or death, like protection, protection, protection. And so that's what I want everybody to know. They think, they think it's about, oh, I have a trust and I'm just gonna, use it as a holding company, right? Or something like that. Or, oh, I have a trust and I'm gonna like build wealth, right? But it's like, no, the reason why you need a trust is to protect what you already have, right? Protect what you already have now. And then also like be private too, because the only reason why they're able to take your assets away is because you let them know that it's your assets, because your name is on the house, because your name is on the car, because your name is on the bank account. So privacy is the reason why you want to set up a trust. Protection is the reason why you want to set up a trust, not because you can get a few write-offs. That's not the reason. That's a benefit, but that's not the reason, right? So I'm just glad that we have like-minded individuals here in the program that really understand like what they can do with the most powerful entity in the world. Every single continent has trust. The most powerful entity in the world. So thank you, Henry. We appreciate you. I'm gonna look into the chat real quick. So one person had a question about insurance. Name your insurance policy to the trust. So if you are placing your insurance policy into the trust, you want the trust to be the owner of the policy. And I think I answered that question. And then someone was asking, couldn't you be 50% beneficiary of the business and the other 50% belong to the family in order to write off property taxes? So we do not write off. So if you want to, so generally when you have a property, you're just going to put it into one trust. There's no need for you to put it into multiple trusts. So you just want to choose one trust where you're going to place that house, okay? So choose either the business or the family, and you're just going to choose it based off of the operation of that house. So is that house your primary residence? Then because it's personal, you put in family. Is that house a rental property? So because it's business, you put into the business. So someone asked, do we notify the mortgage company, insurance company, and the title company? So yes, you're going to update the mortgage company, let them know who the payer is. The insurance company, yes. You can also change your utilities as well. So for example, gas, internet, electric, water. And then as far as the title company, you don't have to really do anything with the title company. Unless you have like title insurance, then you can let them know so that they can update the title insurance. So do you have to register every single month for the workshops? No. We automatically send you all of the workshop emails every single month. So you have lifetime access to be able to attend all of the workshops. So the next workshop is going to be the second week of February. So I believe that's the 9th to the 13th. So put that on your calendar because we want to see you here on Zoom, because you watching the workshop all over again is going to allow you to retain the information more. So my adult children are the board for the business and the ministry. Would there be any conflicts? So no, there's no conflicts. Will not go up. Yep, we mentioned that. Let me see here. Thank you. And your highest commission. She said yours is the highest commission I've heard. Yeah, we are want it to be a win-win situation. So 20% to our affiliates. And let's see here if there's any other questions. So if you acquire several real estate properties, can they be under one single family trust or should they be under separate trusts? So best practice is for you to have one property per trust. So you can put multiple properties into a trust, but once again, that is putting you at risk because you don't want to have all of your assets in one trust, which is the same reason why we don't put the house and the car together. So you don't want to have two houses together either, because just in case one property, just in case something happens with one property, and let's just say that somebody wants to sue the owner of that one property and they go after the trust, there's two properties in that one trust, right? And so you have to also think from a standpoint of what if my trust is sued, right? And we will leave Earth one day and the trust will speak for you. That is so powerful. I love that. Thank you for sharing that. All right. And let me see if there's any other questions. Tomorrow is never promised to anyone. That is so true. Wow. A will is a wish list. And then someone was asking about dual citizenship. So I don't have any information yet. I'm just connected with people that are able to give me citizenship. So if you want those connections, I'll give them to you. Do I put my business into a trust? Yeah, if you don't want to be the owner of your business, then you do want to transfer your the ownership interest to the trust. Yep, so get into the Telegram, everyone. And yes, I said utilities, so you can update the utility company too to have your utilities, the name of your utilities in the trust. So you definitely want to do that. So my utilities are in the name of the trust. Can you send the link for the playback? So you have to ask Maria, all of the recordings are in the online portal and they are under workshop training recordings. So we don't send you the links to the recordings. You have to log into the portal to access them. So can you transfer a sole proprietor or a DBA? Yes. And on Tuesday, what is the time? So we do have 2 master classes next week. And the master classes are Tuesday at 7 p.m. where we're going to be talking about real estate investing. So how to fix, flip, how to buy, fix, and flip mobile homes. So one of our educators is my personal mentor that is teaching that information. So you guys are going to be able to learn from him on Tuesday. And then on Thursday, our funding manager, Brian Dorsey, is going to come in at 12 p.m. Eastern Standard Time to teach you about the business credit and business funding. Ms. Patterson said, I believe we all have a testimony that has urged us to be better. And thank God he has led us to Christina. Thank you for saying that. I appreciate that so much. I actually want to know if anyone wants to come off mute and just let us know like what their experience has been during the workshop and if they have a personal testimony or if they have anything that they want to share.
First, Christina, how are you?
I'm doing good. Maria, how are you?
Very well, very well. Thank you so much. Amazing information. And I do appreciate you getting a little personal with us today because I think that helps everybody come together and connect and, know the background, because it's not just about, like you were saying, tax breaks. It's about creating a legacy and a lineage that lives beyond you. So I do appreciate that. And so I just wanted to give my story quickly. I'm adopted, so I am starting my lineage. And I've watched family and friends grow up that had trust for, like, my cousins, and best friends had trust handed to them. I had to join the military, and I had to go to war to create a fund, like, to start my money. I left high school, I joined the military, and I went to war. And that was the first income I've ever had. And I don't have a bloodline. Like, my whole family is adopted. So I don't want my kids to have to go through, and I don't have kids yet, but I don't want my kids to have to go through what I went through just to create funds and create a life for themselves. So I'm here just being super thankful. The military did do something. I graduated with my doctorate at the end of the year. So I do appreciate those
Congratulations.
benefits. Thank you. I do appreciate those benefits. But also, nobody should have to go through or do what I did or see what I see just to create a life for themselves. So this information is so crucial. It's helped me change the trajectory of what I can now do with my funds and my assets, because I've waited so long. I've made the money, I've acquired the assets, and I'm like, I need to protect this. And I've heard about trust, and I don't know. I've heard about trust, and I just never had the opportunity to do this. So I was one of the ones that watched you for about 6 months before investing, and I just wanted to just send big hugs, big love to everybody in this environment, in this community, and let them know we're all a team, and everybody does it for a reason. And I'm just so grateful to be here.
And we are so grateful to have you, Maria. So thank you so much. And you have a powerful testimony, because you are creating your lineage and your legacy from scratch. And so what I want you to know, Maria, is that you're breaking those generational curses where like in your family you don't have a lineage, right? Or in your family where wealth is not transferred, right? So now you are going to break those chains that's on your bloodline, so that your children, your descendants, and their descendants don't have to go through what you went through. And that's so powerful. And that takes nothing but courage and strength. And I can just tell by your story and you going to war, like, I don't have the guts to go to war. I'm sorry. When I was in high school, they was trying to recruit me to the Air Force, and I thought it was a good idea because I wanted a free education, but then I was like, no, I don't want to do it. So it's like it takes a very powerful person to be able to go through that, and you're that powerful person. So I'm so glad that you're here, and I'm so glad that you're going to impact the future generation.
I really appreciate that. And part of my practice, I am going to be a practitioner of Oriental medicine, and I am going to be treating intergenerational trauma through acupuncture and Chinese medicine. So that is going to be my health ministry. And I've created genetic tests for adoptees to be linked to their lineage, because even though they're going to be separated from their biological family, they don't have to be separated from their biology. So all of this was what I built, and now I get to protect it because of you. So I just, oh my gosh, I'm going to connect with you because I want to offer you a genetic test for you and your family so the health lineage can live on. So that's how I just want to show appreciation to you. So I will be sending you an email, my girl. Thank you.
Thank you. Thank you, Maria. You know what? It's so divine that you said that. And I would just want everyone to know that everything is divine. All of you are divinely guided here. And I'm a very spiritual person. I'm very connected to the higher source, to God. I'm very, into the Bible, into all of those things, right? And so, like, everything that happens to us is spiritual. Everything that happens to us is divine. So we're all connected for a reason and a purpose. And I know without a shadow of a doubt, right, that God has put it in me to share this information with you. I held it in for so long, right? Because I started this journey when I was 25, but I didn't start sharing this with you guys until I was probably 32. So I held it in for so long, right? I was like, I guess one of those gatekeepers, right? Whereas like it until so many people started asking me, but what's a holding company? But what's a trust? But what's all this stuff? And so when I was led, right, I had to be led to do this and I had to accept the call. And then I had to be obedient to answer the call and actually create all of this for us. And so because I'm obedient, like that's why the right people are divinely guided to the community. So you're going to find out and you're going to discover that we are all the same. We have all been guided to this community to do life with each other. And this is divine, and it's because we are the same. And so what we are is we are the generational curse breakers in our family. If you really think about it, listen to Henry. What did he say? He's like, I have to create this now because I have children. Maria's like, I don't have a bloodline, so I have to break this right now, start from scratch, blank canvas, so that when I have children, right? You guys are the ones that's doing the work. Everyone on this call, you're the one. Your mom and dad didn't do it. Your children are not going to do it. You're right there in the middle. That's why I'm saying we are the same. We're all like-minded and we're on the same journey. That's why we're here in this community together. So everyone needs to tap in with each other on Telegram. Please connect with each other. Facebook, please connect with each other. I am in there from time to time. I will show up more. I have 3 children, so like my schedule is a little crazy. But I do what I can and I have a team. There's 6 people on my team and they help me with every single thing. So we are here to support you, each and every one of us. So it's not only me and my team, but it's also your other fellow community members. If you get in there and you start to get to know them, like they really deliver value too in their experiences. Yep, look, Ardina said, I am the generational curse breaker. You really are. You really are. I promise you. I promise you. I promise you. You are the one that's breaking those chains in your lineage. And we have chains of poverty. I will tell you that that like me and my family, like we have chains of poverty, right? I didn't grow up as a trust fund baby. I wasn't born into this, right? And so we have to break those the bondage, right? And it's unfortunately it takes us, right? And then we do it with fear. We're scared, right? We're like, oh my gosh, I don't know anything about this. And so now I have to learn all this new stuff, right? Everything that you guys are learning is brand new. A lot of the stuff, a lot of the people in our community, they like heard about a trust, but they don't know anything about it. Or they've done a little bit of research and they're like, okay, yeah, this is, something that I need. So this is all new. And you just got to give yourself grace. Give yourself the grace that you need and the time that you need too. This is not a race where you have to get this trust set up in one day, right? We show you how to get everything done in 1 week, but in all actuality, you should be sitting with yourself and thinking, what is the purpose of this? What am I going to put as my purpose and my intent? Right? What are my restrictions going to be for my beneficiaries, my spendthrift provisions? What are they going to be? Right? Give yourself time because this is the foundation of everything. And so you want a solid foundation. And just like the trust is designed to outlive you, your legacy is going to carry on forever, for many generations. And so it definitely wants to be to where you have set it up to where it's a legacy that you actually want to leave, and a long lasting one. Miss Patterson said, I was scared to do Telegram, but I see Ivy here and know it's legitimate. Yes. Um, So you don't have to be scared. That's what holds us back. And that's why, a lot of us, we haven't gotten the things that we need, like all our paperwork, our ducks in a row, our affairs in order, right? We haven't because we're so scared, right? And because a lot of us will just take in the information and then we won't do anything with it. We won't take any action, right? And so all of you guys, you went through the workshop. So now it's time to take action, right? We're not going to just sit here and listen and that's it, right? We have to now apply the action, right? Apply the information and the knowledge, right? That's what this next period and this next phase is. And the beautiful thing that I love about this community is that because you have lifetime access to everything. So I know that I'm not going to live forever, but what I'm saying is that you'll always have access to the portal. You'll always have access to the Telegram to communicate with your other trustees, right? With your like-minded trustees. You always have access to the program, to the workshops, every single time that we show up here, right? Every single time that we provide you with training, you jump on. You have lifetime access forever, that's my favorite thing about it. We don't just say, oh, you 6 months, 1 year. No, this is a forever thing. Imagine if we would have cut you off in 6 months or 1 year. No. So everything that I do, I'm Holy Spirit led and divinely guided, to be honest with you. And so everything that I do, like, is straight from source. And so that's one component is the lifetime access. You need it. And we give it to you. So does anybody have anything else to say? I know that we've been here for a couple hours now. I think 5 hours, 4, 5, a while.
We just love you, Christine, man. I'm telling you what. And take it from one who knows. I've been here how many times now, and I'm still getting more information. You know what I mean?
I know.
You're awesome. I'm telling you. Yeah, there's nobody else out there like you. Period. You understand what I'm saying? You are the number one, baby. I'll tell you what.
Lisa.
You're welcome. I love you.
Thank you. You are such a blessing. I remember being on the phone with Miss Lisa. I remember every word that we exchanged. I remember her leap of faith and she was scared. I remember where she was at. I remember the month. I remember the year, everything, everything, every question, everything.
That's what I'm saying. You are like the number one, and I just bow to you, honey. Bow to you. I'm telling you.
Yes, I love you. I love everybody. Thank you guys. I appreciate you so much.
Christine, I'm sorry. I still don't know how to raise my hand. That should be a question.
Oh, it's okay. It's
But I
okay.
question in the chat about I'm so exhausted too. Oh gosh. About real estate taxes. And Philadelphia is outrageous. Every year they're shooting up the taxes to where there's a backlog on appeals for 2026 for 2025 they have to be done in 2026. It's just too much. People are losing their homes and properties. So my question to you would be, in order to kind of avoid these tax increases and being burdened with a lot of tax increases, which could cause you to lose your properties, would you, like, for example, I have lot properties as well. And so would you, and they're under, did I put them under? Anyway, I have lot properties. Would it be something that I could do as far as maybe putting those under the ministry trust and do community services? And how would that impact? I mean, how would that stop them from, increasing the taxes? Or how could I avoid taxes, real estate taxes on those types of properties through the ministry trust?
Yeah, so we do not avoid taxes. We pay taxes when taxes are due.
Yeah,
So
that
yeah,
increase,
yeah.
constant increase.
So
Nothing needs to be done about that.
so what I would tell you is that if you have a piece of real estate and it is used
Christina, I think you froze.
Oh, for real? You can't hear me? Can you hear me?
Yeah, I can hear you.
Oh, okay. Miss Debbie, are you still there? I don't know if you
Yeah, I'm here. I think you froze on my phone. You froze. Did I miss something?
Okay. Am I
Everything's
back now?
been good on my end.
Yeah. Okay. All right. So I hope that you can hear me, Miss Debbie.
I can hear you now.
Okay. All right. So what I wanted to say is that if you have a piece of property, right? Let's just say it's land, or let's just say it's a house or a building, right? If it's residential, commercial, whatever the type of real estate that it is, right? If it's used for nonprofit activity, right? So any type of endeavor. So you mentioned community service, right? So that is most likely nonprofit. So if you're using that piece of property for nonprofit, then you're going to want to put that property into the ministry trust. As you guys learned on Wednesday, the ministry trust can own real estate, can own a farm, can own commercial buildings, things like that, right? And then what you want to do is once that property is into the ministry trust, and you are conducting nonprofit activity, you can apply for property tax exemption with the county. You have to go through an application process. They're going to ask you for information that verifies the activity of the nonprofit, right? So some things that I know of is, for example, a county will ask you for like a seating arrangement, or how do you set up your assembly, right? So if you're having services, right? Or if it's, a farm, or if you have a church, something like that, right? They'll ask you for proof, right? And so as long as you're able to provide that and they will process your application, then you are able to qualify for property tax exemption. And so it's up to the county based off of how they process your application. And if they do that and give you property tax exemption, then you're going to be exempt. That is something that is not like a one and done thing. You have to constantly reapply for your property tax exemption. But if you are approved by the county for property tax exemption, then your property taxes go to zero and you don't have to pay any property taxes for that property that you applied for. Okay, so I just wanted you to be aware of that if your particular circumstance, if you qualify with your particular circumstance. Okay.
Okay,
Okay.
thank you, Christina.
You're welcome.
Did you? Oh, and I have to say, how much I really appreciate you. I have been looking for this for years. I wish it had happened earlier because I would be well on my way by now. But I'm just grateful to God that He let me come across you, because this information is really important. And like you said, we have been left out, blindsided, and taken advantage of. But I'm glad you're here. God bless you.
God bless you too, Miss Debbie. Thank you. And I'm glad that you're here too. And now is the time, my dear. So you were divinely guided here for a reason and in this season, and we're going to help you get it done.
Okay.
So without further ado, we're going to conclude the workshop. So you do have homework. The homework is we did email you what is the name of this thing? I just remember a survey, excuse me. Lost the word for a moment. We emailed you a survey, so it is in your inbox. So if you are able to fill out the survey and just let us know, you know, some feedback and of your experience and, you know, what it was like being a part of the workshop, because we do take that into consideration and we are always wanting to improve your experience here at the workshop. So that is your homework. And next week we do have 2 master classes. So on Tuesday we have a real estate master class at 7 p.m. Eastern Standard Time. You will receive a text message. You will receive an email with a Zoom link, and we will also put the Zoom link inside of our Facebook community and inside of the Telegram chat under the announcements section, okay? We also have the other masterclass. So our educator, Brian Dorsey, he is totally fine. I had spoke with him yesterday after he got into a small fender bender, and he is going to do the masterclass for us and provide the training next Thursday at 12 p.m. Eastern Standard Time. So that is when you're going to be able to get the information on the business credit and funding for the trust. And it's going to be so informative. So I do not want you to miss it. So you are going to receive a text message and an email with the Zoom link, as well as it's going to be in the Facebook group and the Telegram chat. So without further ado, I want to say everyone have a blessed and highly favored rest of your Friday. Have a fantastic weekend. And if you have a long weekend because of Martin Luther King Jr. Day, then enjoy your long weekend and your Monday. And it's time to celebrate. So we want to be able to hold you accountable for setting up your trust. So go ahead and review the workshop recordings, dive into the ebooks, and pretty much go through everything before you begin the process of setting everything up, so that you can have a clear understanding. Because sometimes when you hear it a second and a third time, it starts to connect the dots, okay? And once again, next workshop is going to be February 9th to the 13th. So we will be here in this place and space, but don't worry, because we will send you reminders so that you can prepare for the next workshop. So without further ado, everybody have an amazing weekend. I love you so much.
Bye. Love you much.
Bye.
Bye.
I will see you guys soon. Thank you.
Shalom, shalom.
Shalom. Thank you.
Outlay the most modest of purchases: a loaf of bread, a carton of milk, 3 potatoes, and a small onion. "Ma'am, you are short," the cashier, a young woman named Candace with tired eyes, said wearily. "You are short about $1. "How can that be, baby?" the old woman muttered in confusion, sorting through the coins again. "I counted at home. I counted everything." Behind me, someone sighed in annoyance. The line was growing, and people were in a hurry to get home out of the bad weather. I looked at the shrunken figure of